Hi, I'm Richard Glover, Director of Reverse Mortgage Division at American Fidelity Mortgage Services. This is our contact information here. We have an 800 number, 800-365-3539. We maintain that 800 number in case seniors are paying for long distance phone calls or paying for toll calls so that they can call us without having to pay for it. Our local number, 847-464-8080 here in the Chicagoland area. And then our website, there's a lot of really good information available on our website. We also have a Google Plus page and a Facebook page. Those are both American Fidelity Reverse. And then you've seen our YouTube videos like this one. We have a whole channel full of things that we've compiled and that we'll be adding to. And today we're going to talk about some home purchase information. As I said, I'm the director of our reverse mortgage lending division. We have several people that are reverse specialists that work specifically in this category. It's a very exciting category because people are starting to understand how much a reverse can help them in their retirement and what it can do as a fourth component of your retirement, utilizing your home equity. We are a NARMLA member, which is an important designation for us. It's a national governing body of the Reverse Mortgage Lenders Association. And basically, most people, there's not too many people in the state of Illinois that say they do reverse mortgages that are actually members, sadly. And if somebody tells you they're a reverse lender, then they better be a NARMLA member. If they're not, then they're really not in the reverse mortgage business. They just have access to the ability to broker the loan. We're also an A-plus affiliate, A-plus rated affiliate with the Better Business Bureau. So we are an affiliated company. You can find us on the BBB website. And then finally, we are a HUD-endorsed, direct-approved lender. And what that does is, it basically means we're the bank in the transaction. So we're not a broker. We do a lot of forward FHA business, and that's what FHA calls it, is forward and reverse. So we do a lot of forward FHA business. We underwrite those in our office. And then on the reverse side, as I said, we're not a broker, we're a direct lender. And that gives us a lot of control, gives us a lot of access to products, and it makes us more nimble than what our competitors are. Some of the legal stuff that we need to say every time, we probably could construe this as being advertising, so we want to make sure that we're covering our bases from the standpoint of the legalities. We copyrighted the material here. We do business in Indiana. We have licensed professional reverse mortgage person in Indiana. We have a group in Wisconsin that does reverses. And then the State of Illinois Bankers Association, the IDFPR information is required to be passed along with all advertising. You'll call that, I think, the fine print. Today we're going to talk about a really neat product that we've developed here at American Fidelity, and it's called the First Resort Home Loan. And essentially, a lot of people haven't thought about this, but you can use a reverse mortgage to buy a house. Our position, and what you're going to see in the media and what you're going to hear a lot about going forward, is it really does not make sense for someone to pay cash for a house that's a senior citizen. It's really just kind of a bad idea to lock up all your money in there. And I think the reason why a lot of people decide that they want to pay cash for a house is they don't want a mortgage. And I understand a generational effect of not owing any money, but I think you got to open your mind up to the fact that having cash and cash flow and access to cash is the most important part of your retirement. And if you look at the reverse mortgage for purchase when you're downsizing, you're going to find out that it's better than getting a standard mortgage because you don't have to make a payment. You can if you want to, but you're not required to. And if you do make that payment, you'll have access to some of those funds over time as well, and we'll talk about that as we evolve this video here. The other piece is, what we've done is we've said, buy a house, preserve some of your capital for retirement, add a line of credit so you have access to money when you need it, and reduce the cost of your reverse mortgage. And the way we do that is we use 60% of the funds, and we'll talk about that when we get into our important terms. We're looking at a 67-year-old married couple, which is the top end of the baby boomer generation. They're buying a $250,000 house. They sold a $400,000 house. and we're going to average the rate over the whole time for this example of 4.89. That rate's actually lower today, but it's an adjustable on an annualized basis. So we just figure a good conservative estimate of interest rates over a 10-year period, as we tell our clients, would be about 5%, because rates are going to go up, rates are going to go down, and if we just use 5 as an average, I think we're giving you a pretty fair number. A couple of important terms to understand when we talk about reverse mortgages is some new information that came in about a year ago, and that's utilization. And utilization is how much of the money you're using. If you use less than 60% of your available funds, you get a break on your mortgage insurance. And the whole idea there is a reverse mortgage is less expensive. In our example here, before this utilization change was made in 2013, this client would have to pay mortgage insurance of $5,000 no matter what. And now, because they're using less than 60% of the money, then they only have to pay $1,250. It's a big difference. It's a reduced cost. It's part of the new reverse mortgage. It's why it's better and it's safer for seniors. The other part of the new reverse mortgage is that a non-borrowing spouse can be less than 62 years old and still be able to live in the property if their older spouse passed away or had to leave the home. So here's the example for Mr. and Mrs. Reverse on their downsize. We just kind of looked at the numbers a little bit. And what happens on the first resort home loan is they come in with about $174,000. They reduce the amount, the $75,000 we talked about in the last example. And then we rounded that to $50,000, but it actually winds up being $56,200 they have access to after a year. So at the end of the day, what the results are here is that you're getting more money, preserving more of your assets for your retirement by doing a reverse purchase and not doing a mortgage, because if you do a mortgage, you wind up with a payment. And what I tell people that are trading in and out of their retirement account to paying a mortgage is just pay your mortgage off then, because that's essentially what you're using it for, and why spend the time? So in this example, we're just going to use a 2% appreciation rate because, as I always say, appreciation does not matter. But let's take a look at where we are in 5-year increments on that line of credit. It's grown to $72,000. It's grown to $103,000, call it 104. And now here we are at 15 years later. We've got $150,000. Now, we're assuming a 5% rate here, and we're saying basically you accrued $149,000 in liquidity on your line of credit over that 15-year period, and it cost you $174,000 to buy the house. So essentially, you only paid $25,000 for that house when you look at it this way. And what that means is that you wound up with access to $375,000 of what was the proceeds of the sale of your home, $400,000 in that example if you're downsizing. The whole idea here is that the first resort home loan offers you a lower cost transaction, a line of credit that you'll have access to after a year, a line of credit that's growing at a rate equal to your interest rate, and a line of credit that can backstop your retirement. Imagine if something happened to one or the other spouse. You lose that Social Security income. Isn't it comforting to know we have access to another $100,000 10 years later? On top of it, maybe it helped you not have to erode the other funds that you set aside or invested in your retirement. Remember, your house was initially a plan for your retirement. You were like, I'll sell it, I'll move into a new place, I'll pay cash. We've just added a component that allows you to not have a mortgage payment, which was the whole idea around paying cash for the house, but it also gives you access to more funds and allows you to invest more money in your retirement. So by all accounts that we have here, this is a win for everybody, and that's why when you go to downsize your home, you should be looking at a reverse mortgage as your loan of first resort.